Hello everyone and welcome to today's morning report on Wednesday the 13th of January with me, Rich Perry, market analyst at Handset Markets. The European trading sessions again bouncing, and that's been driven by China. The European markets were positive yesterday, and they're positive again today. You've had better than expected China trade data that came out overnight. Let me just take a look at it very quickly. The exports came in at minus 1.4%. They were due to come in at, or expected to come in at minus 8. Imports at minus 7.6, and they're due to come in at minus 11.5. So both metrics came in better than expected, and that pushed the China trade balance up towards 60 billion dollars. And that certainly has driven a bit of improvement in risk appetite. And the improvement has also come with the fact that the PBoC has also kept pretty much a fixed or a flat fixing on the yuan rate, which sort of has helped to alleviate a bit of concern about the consistent depreciation of the yuan, and helped to drive risk appetite across the board. There's a big reversal of these safe haven trades that we've been seeing in the past few days. Currencies such as the euro and the yen are lower. You've got gold, which is lower. You've got an interesting reversal also in treasury yields. The US 10-year has rebounded today, and also the 2-year as well. So interesting reversal all around in that risk trade, and certainly the commodity pairs are benefiting off the back of that. You've got the Aussie dollar, the Kiwi dollar, both higher. And also the Canadian loonie also benefiting as well. The oil price is the big news as well. Oil prices actually on the WTI contract hit below $30 for the first time in 11 years, but that's a big psychological level. Rebounded today. You're actually seeing sort of 2.5% higher on the oil price at the moment, as things stand. But as this did sort of happen at early doors yesterday as well, so I'm not getting too carried away with this as a recovery play yet. But we need to certainly hold on to gains at some stage if we're going to see improvement in risk sentiment continuing. So what we've got to look forward to today is not a great deal really in terms of the economic data, other than what the China data. We've got the oil inventories for the states coming out, forecast to be around about 2.5 million barrels positive again. So that would not necessarily be positive for the oil price. So it could be that oil starts to fall away again in the afternoon if that is the case. So that takes me to my chart today. Now I spoke about the improvement in Europe or equities generally, but European equities certainly, and we had some very strong reversal signals actually. Now, what you have got on the DAX is that's an inverted hammer, and also we had a strong entry to that. This is a three candle setup, where a strong bear candle, a reversal candle, and then a strong bull candle. That actually gives you what could arguably be a morning star reversal, which is a three candle setup, which is a bottom indicator. And that's continued today. Now, what we've also got is the stochastics crossing over positively. We saw this back in December, where we subsequently got a rally. The move on the market has jumped up another sort of 1.5% in early trading. Now, I spoke in the morning report about the pivot line 10.122, which was the low in December. Also caught the high on Monday. So we've sort of traded around that. We're still on the brink of trading around that and trying to still break through it. Here we go on the hourly chart where you can see it a bit more clearly. Just starting to break through it. So if we can break clear of that, we can then go on to test the initial resistance again at that 10.223 mark, and then subsequently 10.343. So a few resistances there for you to work with. You've got a small base pattern as well. If you continue to pull away from this, you could argue that it's possible to measure the base. So that's 9813 up from 10122. So that's what, about 9813. So it's about 250, 300 ticks up on that. So you'd sort of measure that up back in the realms of like 10.4, 10.5 area. being actually interesting area that brings you back into the resistance of that old low around 10,400. So that is a possibility if this recovery continues. So with that in mind, you'll be looking out for the support at 9979, which was a little reaction low from yesterday, just prior to the close. And I'd say that that is your support in place now. So the support band is now that neckline at 10122 and 9979. You've got a decent band of support there. So the recovery is building. Again, it's only a near-term scenario until we sort of can build more substantially. But at the moment, the recovery is on, and we could see the RSI, for example, unwind back towards 50, which would around about where we saw the December rally falling over 54. So there is scope for this rebound to continue. So I wish you good luck in your trading today, and I will speak to you later. Thank you.